Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Monday, June 13th. Great to have you with us. Thanks for making us part of your day. I am your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com, all of our radio affiliates there, including the full hour program now on AM 1300 KOLY out of Mobridge, South Dakota. You can also find our latest news of agriculture, social media links, and more at MarketTalkAg.com. Well, as we take a look at the market trade today, a relative risk-off tone with the sharp drop in the stock market. Again, a lot of inflation worries there, a lot of worries about what the Fed might do this week. Tons to talk about. Joining us now, bringing our good friend John Heinberg with Total Farm Marketing into the show today. John, we had you off the hook for a couple weeks here on the show, but great to have you back in on a Monday. Hope you had a good weekend.
Yeah, we did. We've been moving a little bit to a new place, so that's been some of the busyness the last couple of weeks. It's not a fun thing to move, but I'm looking forward to the new opportunity that we have here at this place. So, but glad to be back today.
Well, I appreciate the time as always, and let's dive right in. You know, I'm not shocked with how the markets reacted today after Friday's inflation data, and looking at things here over the weekend and the overnight and into this morning. That stock market really kind of weighed on everything today, although I was impressed with how corn and wheat, for the most part, held up as we got to the close here today. Maybe just, an indicator of some of the strong fundamentals underneath those markets, John.
Yeah, I mean, that's where everything starts with today is what happened with the equity markets and the volatility side. Again, you go look at the volatility index or the VIX, and it jumped up again today. And I heard Arlen on the midday talking about the fact it gets over 30. It looks like a bit of a sell zone for a lot of assets. And we were pushing 33, 34 today. And you saw that spill over into pretty much every sector of the ag sector today as well, at least for the first half of the session. Now, like you said, corn and wheat kind of battled off their lows. So did the livestock markets. And so that was encouraging to see. Soybeans still continue to see selling pressure throughout the day. But again, that corn and wheat markets, we got through the USDA numbers here last week. Wasn't exactly the best numbers for corn, maybe a little bit heavier than the market was anticipating. But again, there's still some figuring in this market that, number one, the acres aren't going to be there where it is. Number two, we've got this heat wave coming through that's starting to start kicking in here full bore in the next handful of days. Is that going to be good or bad? I mean, it's a crop that needs a little heat right now, but if we prolong it, does it cause more damage than good? So that probably brought some of the money back into that market today. Plus the funds have been pushing things lower here through the last handful of weeks. And, maybe we've taken all that weather premium out and now we need to bring a little bit of it back in.
Well, you mentioned that weather premium, and this is the time of year where we really enter a weather market typically, but obviously there's a lot of other factors out there that almost feel like they're amplifying, maybe supercharging the weather side of this story, not to mention, inflation, of course, but then the production concerns, et cetera, et cetera. It almost feels like this weather market feel could be a little bit amplified here as we get into the back half of June, John.
I think it can be, and everything we've seen this year too, just with the headline trade that goes on and the amount of money that's flowing in and out of the market very, very quickly. And, and realistically, the market's still thinly traded. So when there's not a lot of pieces to the puzzle, things can move around very quickly as we're, searching for those buys and sell spots and things get moving. Again, this is a market that's going to have headline risk or headline premium in front of it on a daily basis. And, we're, again, looking at this forecast. It started last week. It's some of the reason maybe the core market hung in there after that USDA report. So we'll have to kind of watch how this goes. Today, we'll get our next round of planting numbers for both corn and beans. We'll get our next round of crop condition numbers, our first round of condition numbers for beans. Things are in pretty good shape overall. So, we'll have to really keep an eye on what the market feels about those. Again, crop condition numbers are very, very relative in my mind, but it's just at least more news and information for this market to trade. So, when the big picture comes around, if we lose that, USDA area brought corn yield down to 177, if that tightens up even more so, that's going to really put some crimp on this old crop or new crop projection for next year, especially given where the demand is at this time frame. So it's going to be an interesting market. It's going to be a volatile summer. I don't think the volatility we've seen is even going to slow down one bit. If it maybe even accelerates a little bit in terms of the craziness, especially if we get into a true weather type market because of some issues.
John, real briefly as well, you mentioned some of the weather stories. I've heard and seen some severe weather, some hail, especially in parts of the plains the last few days. Have you heard from any clients here today or over the weekend that they had some hail damage out there?
Not specifically, but I mean, I know they're out there and through the office. And again, those are horrible situations for that person and that location. Again, do they really move the needle unless it's truly like the derecho event we had here a couple of years back, where we see an extended line that does a lot of damage. Again, it just it's more difficult for that time frame and for that individual producer. So that's still something we're talking. I mean, we got some crazy weather coming in that's already behind me a little bit as it rumbles here behind me today. We're watching things very closely. If we do see something significant develop, what can that do in terms of the long haul? But again, it's going to be a market that's going to be very, very volatile regarding these weather situations. And again, we need every bushel of corn and beans that's out there. And that's why, we're going to be very, very volatile if we get anything that can limit that.
Looking at new crop contracts, whether I'm talking corn, soybeans, or wheat here, John, do you see any major differences in maybe the mentality a producer should take at marketing some of that here right now? Obviously, there's plenty of weather concerns out there and risks for growing season ahead for all the crops, specifically corn, beans, and spring wheat. But do you see any major differences in how I should approach my marketing right now?
A lot of it, you got to place it on the calendar here in this window. We're getting to that Father's Day weekend. Typically, we see some strength in the market, up until this area, and then we typically see some rollover. Now, with that being said, we got a different environment this year. You got the inflation situation, you've got the Ukraine situation, you got the global demand, what's happening there. There's a lot of moving parts to this, but again, it's still a window. Just the way the market's been acting, I've been talking to producers about making sure we're getting caught up on sales here. There's still good value on the board. We're getting to that spot where, if the weather doesn't become an issue, this market could start coming back down. We've already seen that as we've worked off the highs and the funds have liquidated some of that long position. We got to throw in the outside concerns too. I mean, if this stock market continues to tumble and we move into a bear market situation, which I believe the S&P is actually there today. And, I did hear 97% of the stocks were down today on the equity markets. That's a massive number. And regardless what we want here in terms of the fundamental story, if the funds start moving that money to the sidelines, they're going to move it out of everything, regardless of fundamentals. Again, 2008, 2022 are two totally different situations. But then it's just going to come down to risk and money flow. So producers, getting back to your original point, they need to stay on top of things here, making sure you get to a comfortable level of sold. If you want to stay in the market, look at some of them call option strategies, buy some time with them. They're not cheap, but if you're really concerned about things, I'd much rather have that bottom covered with cash sales and reown with calls versus not having anything in place.
John, as well, I've seen some chatter on social media about some guys and gals even selling 23, 24 crop just because they're worried about a recession. That we've started to hear that word get thrown around just with all the inflation worries. What are your thoughts on that? Should growers be looking that far out to make at least a little bit of a sale or find a floor at this point?
There's some really good value out there, and that is a definite concern longer term. Or, what happens if the Ukraine situation somehow gets straightened out and they're back into the marketplace to some extent? And plus we don't even know what acres are going to be out there. So when you're looking at 650, 640 for a starting point, I don't think it's a horrible idea to make sure you protect value of some form. whether it's just dip the toe in the water for a small percentage of sales and go from there, or find a way to work some put strategies in, at least protect a solid value. Given the time and the cost per day, they're really not that expensive out there. I mean, they're still costly, but it's cheap insurance when you're talking 2 years out. So I think it's a spot producers need to be thinking about it, at least at this time frame, because there's a lot of unknowns. At least you can lock in the price. I mean, obviously the unknowns too on the other side, what they're going to be cost, what, is fertilizer going to come down, is fertilizer going up, who knows what's going to happen with this inflation data. But again, right now the recession talk is a major concern, and that might be something we want to think about, because if this market does start coming off the inflationary game, these prices are not going to stay here.
John, let's talk livestock today. And I think it felt like overall, both cattle and hogs, at least to begin the day, feeling that outside market pressure from the stock market here coming off the weekend and all the inflation news. Now, hogs front months did rally a bit here today. And I have to wonder there, as we firmed up a little bit, could that have been some of that June contract maybe pulling some of those front months higher, just because, that June contract's got to stay with cash here, goes off the board tomorrow?
Yeah, we've had a very interesting situation. June expires tomorrow, and we saw the cash kind of flip over on top of the futures. That's been something that's been the other way around here for many, many months. So that was probably a big part of it today, is the fact that you're looking at where the index is, you're looking at where the June hogs are. They do need to square up going into tomorrow. So we saw a little bit of a movement in that regard. So I think that was a big part of it. You go even look at the next month down the line, July, at things compared to where that direct cash market is, we're pretty undervalued. So maybe we're just finally seeing some money flow squaring up. It felt like last week the market was trying to price in a potential move lower in the cash market. We'll have to see if that's there or not. Didn't see that at midday trade today, at this time frame. And the hog numbers are starting to get a little bit tighter. The demand continues to stay pretty dang good for pork on the domestic side, just because of the competing costs of other goods. So that's going to be something we'll have to continue to watch. But it was been a very odd market, for lack of a better way to describe it, lately, with the way the premiums between the cash and the futures market have been acting.
I would have to think producers going to be pretty vigilant here as we get after tomorrow with that contract, that June contract going off the board. Will we see the cash index in July? Will we see a bit of a separation of those two again? I feel like that at least the possibility is there, opens us up to some downside risk here later this week.
That's a possibility when we get that June contract off. Again, you got a lot of things just moving around right now with expiration and people trying to cover positions, and that just really puts a lot of different move in the money flow. We'll see where the direct cash trade is. We're trading significantly higher. The index is still a little bit softer. It may have some catch up to do with that, where the cash market is at this time frame. So yeah, it's going to be interesting next couple of days after we get through June tomorrow and July becomes a lead month. How does the money handle it? Again, like I said, the market feels like it wants to price in a lower cash move here. So we'll have to see if that starts coming together in that regard.
Cattle market, triple digit losses there. Really felt like it was that stock market pressure today. But as you look at the cattle complex as a whole, was there anything else that stood out to you that moved us to the downside on Monday?
Kind of the same scenario there. We got cash trading over the futures market, a little bit of a basis flip here last week with 136, 137 cash, and June cattle trading underneath those levels. So we need to get a little bit caught up. We felt a little bit undervalued there. We'll see what cash trade does again this week. Biggest thing we're really seeing is the weights have really tumbled down another 6 pounds last week. We're pushing about 30 pounds of drop now in 6 weeks, actually running carcass weights under last year. Now we still have heavy slaughter numbers, so that's still keeping plenty of product going. But the big part of that is the choice select ratio, or that spread between the two, starting to widen out. So that tells us our dress percentage is not as good. So therefore, the U.S. consumer wants that choice beef. Packers need to bid up to get more animals in to get that product out there. So, but with that, now we're hitting a window past Father's Day. Typically, we see demand slow down a little bit here till we start thinking about the 4th of July purchasing power. So it's going to be kind of one of those hand and mouse, cat and mouse type plays here. How does the demand handle this? Where are we at in terms of the cash market? So a lot of little moving pieces. It feels like we put a short-term low in, seasonal low here around the 1st of June for both lives and feeders. Caught some of the funds on the wrong side of the feeder market, so we saw a pretty good price recovery. I will admit, even though we finished a couple bucks lower today, pretty much across the board, the fact that we rallied off the session lows fairly strongly today still makes me feel like there's some buyers down underneath here. So we'll have to watch it. But again, it's seasonally cattle markets like to work higher now until about the middle of July and 1st of August. So we'll see if we can go ahead and put that summer high in here before we get the rollover into the fall.
Well, I know a lot of folks are watching the consumer demand side of the equation. I'm hearing a lot of demand for ground beef versus some of those, say those strip steaks, ribeyes, et cetera, et cetera. And that's something I think to keep an eye on as well here in the market is just, what does that demand look like domestically here? If we continue to see inflation running rampant as it is currently.
Agreed. And, again, you're talking a lower price cut too. We're talking ground beef. And, if you got a consumer dollar that's pinched, whether it's gas being at $5 a gallon nationally or a stock market wanting to roll over and take value out of the economy, those things all come into play. And that's still going to be a major focus of this cattle market. Still going to be a wet blanket over prices. Is the possibility that the U.S. consumer is not going to be there in terms of picking up beef at the level they could because of those concerns. So that's going to be definitely something we have to keep an eye on. Again, they'll go to the cheaper price cuts. Pork and chicken as competition, ground beef versus the steak side of things. But it's going to be very interesting to watch how the next few weeks kind of handles itself in that cattle market. Can that outside influence of what's happening with those markets really come over into play? Or is this turning into a money flow situation, which it felt like last week, like the funds were on the wrong side. It's time to buy cattle. Seasonally, we were cheap, and it was a good window to push this market higher. So a lot of little moving pieces in there. The big underlying factor over top of all of it is going to be basically the cash market and how it trends. If we can stay firmer on that cash, that'll definitely continue to help out because cash is still king when it comes to these livestock markets.
John, it looks like more volatility in the dairy markets as well here to start the week. What are you seeing there?
That market continues to be extremely range bound overall. Again, just working that range from 25 to 23 and just bouncing back and forth. Can't seem to really get any footing anywhere. Looking at that July contract, we've been in this range since the end of February. So again, a long time yet that we've been just building. So we still got to see how this wants to play out. We're seeing the same thing in the cheese market, which is still a major driver. And not a lot of movement in cheese prices too, just kind of building the same range. With that, again, we continue to build a base, and the longer we consolidate, it usually dictates what type of move we're going to get. Now, historically, we don't get over 25 a whole lot. So if I'm a producer, I'm looking at 24, 23, $25 milk. That's historically good. I want to make sure you're selling into this or making sure you're building that defense somehow into those windows. Because to me, I'd be a little more fearful of a rollover to the downside, especially if we see demand slow down or production kick in. And the money wants to leave that milk market. So, but range bound continues to be the story, and there's good opportunity, I still think, for producers because of that range bound trade.
Well, John, the floor is yours. Before we run out of time, any other final thoughts? Anything else you want to reiterate here on this Monday?
Just keep an eye on that outside markets. I mean, that's a big key. What's going on with that crude oil market? If it starts rallying, that'll come back into the livestock sector too. Again, reflecting those gas prices. We got the Fed meeting this week. Market's expecting a stronger than anticipated base movement on the interest rates. Do we get that move or not? That might give us a little bit of a relief rally in the markets. So we'll have to kind of keep an eye on it. I think right now the whole focus on the U.S. economy is still going to be a big overlying factor that we need to be focused on. Again, producers, understand the calendar. We've got a lot of stuff in front of us in terms of really good value. Make sure we're taking care of things, even just safety valves, and just protects, deep outside targets that still work for you. Definitely make sure you got something in place here, because you don't know how fast this market can move if it wants to, especially in the seasonal window if we think the crop is coming along very nicely.
Well, John, if producers need some advice, I know they can reach out to you and the team there at Total Farm Marketing very easily. How can they do that?
Sure. Love chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Again, don't forget about our website, totalfarmmarketing.com. A lot of great information out there. We just had a webinar off the last report. I know we'll be probably piecing something together for the acres numbers at the end of the month. Again, take advantage of that information because, again, knowledge is power in my mind in these markets. So the more you got in front of you, it gives you more power to make decisions, what you need to do for your operation.
Well, John, as always, great analysis. We appreciate the time, and I thank you very much and wish you a great rest of the week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk, brought to you by Growmark FS. That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.